Hello everyone. In our previous lectures, we have discussed about accounting concept, and also we have covered few accounting concept. That is entity concept. We have covered money measurement concept, and we have also covered accounting period concept. Today's in lecture, we will be discussing new accounting concept. So today we will be discussing about dual aspect concept. So dual aspect is your most important concept. Why I'm saying that this concept is most important concept? Because whenever you prepare your financial statement, it is mandatory for you to follow dual concept, right? Whenever you record journal entries. So the very basic assumption which you make for recording journal entry is dual aspect concept. Now, what dual aspect concept says or talks about? Right? Dual aspect concept says that every transaction has two effects. Meaning of every transaction has two effects. It means that every transaction will affect two accounts when you will prepare your books of accounts. Right? Now, if I take example of cash purchase, right? Here, what you're doing, let's suppose you're buying mobile phone for your business. Right? Let's suppose you're buying mobile phone or your business, right? Or you're buying any machinery for your business, right? So let's suppose this is your business, and what you're doing, you're preparing your balance sheet, right? Here, what you have done, you have purchased one machinery or mobile phone, whatever you want to assume, you can assume it. You're buying machinery, let's suppose, from this business, right? Now, if this business is transferring you machinery, right? So definitely what you will be doing, you will be giving cash to the supplier, right? You will be giving cash to the supplier. Whenever we prepare books of accounts, so we prepare cash ledger or cash account, you can say, and also we prepare machinery ledger or machinery account, right? Now, in this, if you see, if we are buying machinery, right? Let's suppose cost of machinery is 50,000 rupees. So they will increase in asset in our organization, right? Machinery is an asset for us, and if we are machinery, so definitely in balance sheet, what we will do, we record it as an asset, right? So we have purchased machine, we are recording this machinery as an asset in balance sheet. Cost of machinery is how much? It is 50,000. Parallelly, what we have done, when we have purchased machinery, what we have to do, we have to make the payment also. So here we'll be giving cash of rupees 50,000 to supplier, right? So if you see, on one side there is increase in asset, and on second hand side there is decrease in asset, right? So which two accounts are getting affected? So you can say machinery account is getting affected when you are buying machinery, and also you can say that cash account is also getting affected, right? So if you are buying machinery, there will be increase in asset, and parallelly what you will be doing, you will be making the payment. So there will be decrease in cash. So here, which two accounts are getting affected? Again, I'm repeating, first is cash account and second is machinery, right? Let's suppose what you're doing, if you are buying this machinery on credit basis, right? Here, you're a company, and what you have done, you have purchased machinery from supplier, and you have promised to the supplier, you will be making the payment after, let's suppose, 1 year, right? You have promised to the supplier that you're making the payment to the supplier after 1 year. So here, what you're doing, you're buying machinery on credit, right? You're buying machinery on credit, and your supplier, he has given you the machinery, right? Now here, your supplier, right? Because you're buying machinery on credit, so your supplier, he will become your second account, right? Your supplier will become your creditor, or you can say lender. Generally, we don't use word, right? So we can say the supplier is creditor for you, right? So now, if you see, if you are buying anything on credit, right, you have purchased machinery whose value is 50,000 rupees. So here, which accounts will get affected? Definitely, first one is machinery account. And second one is creditor or supplier account. Right now, it is a liability for you. Right. What you will do, you will record machinery whose value is how much? It is 50,000 in asset side. Right, in asset. Simultaneously, what you will be doing, you will be recording liability also, right? So you will record supplier's name here in liability side, and you will show 50,000 as a liability which you have to, right? So in this case, which two accounts are getting affected? Supplier account and machinery account is affected, right? So here I have given you a few examples. If you want to read these examples, you can read it. We will be sharing this Excel, PDF with you, right? So you can read it from here. There are several examples. So again, I'm repeating, what is the meaning of dual aspect concept? If you are performing any monetary transaction in your organization, so that monetary transaction will affect your two accounts. This what a meaning of dual aspect concept. So whenever you record journal entry now, you will follow this concept, right? So I can give you a few examples. Let's suppose what you are doing, you are paying salary to your employees, right? Journal entry you will record when you are paying salary to your employees. So you can say salary account debit to cash, right? So here you can see, let's suppose you have paid salary of rupees 1 lakh to your employees. So this 1 lakh salary will be credited into the accounts of employee. So which two accounts are getting affected? First one is salary and second one is cash, right? Let's suppose there is standing salary, right? Salary is accrued, but you have not paid the salary yet, right? So here what you will do, you will write standing salary instead of salary. And here you will write down, sorry, this journal entry. Here what you will do, you will write down salary account debit to outstanding. Here you will write down outstanding salary 1 lakh rupees and 1 lakh rupees, right? So here which two accounts getting affected? First one is salary, right, which you will be debiting in P&L account, and second one is outstanding salary, which you will be showing as a liability in balance sheet, right? So here these two accounts are getting affected, right? So if you want to learn more about dual aspect concept, so record more in journal entry, so you will get the idea, right, about dual aspect concept. In coming sessions, we will be discussing about more concepts. Thank you.